Greetings. I welcome you all to this series of technical analysis where we will be looking at some of the most common and familiar price action structures. Um, this is our risk disclaimer. I advise you to read it before viewing any content of the series. So in this video, we'll be talking about supports and resistance, looking at how they form and how you would normally expect price to react to these zones or to these levels. Okay, so I made some few slides, just brief of what we're going to discuss. So when we talk about support, support is a strong price that the market is consistently failing to break below. As you can see on the picture, we have that blue horizontal line, which is support, our support level. So as you can see, the market failed to break below first time, second time, it failed twice. It couldn't go below that price level. It usually pushes the market back up if it is not broken. So as you can see, when it rejects on the support zone or on the support level, it goes up again, it rejects here and turn up again. So it usually pushes the market back up if it is not broken. We will not sell at support level until it is broken with a true breakout candle. So if price is at a support level like this, it is not advisable to take sell trades, okay, because there is a possibility of price rejecting and going back up. So if you take a sell trade just close to your support level, then that's a low probability trade. That would be a low probability trade because you are trading where there is a possibility of price going up. So if you sell close to a support level, that's low probability. But we're not talking about trades and stuff. We're just talking about supports and resistance. Support levels tend to push price up if they're not broken. Okay, it's just what I was saying now. For this reason, we will not consider taking sell trades. We'll look for buy trades once the support level is confirmed to hold. So if you have something like this, support, you can see that price is rejecting. So it's advisable to look for long positions or look for buy trades going up, because you know that if it rejects, it's gonna go up like this. If it does like this, you know it's gonna push up. Uh, then you have a resistance, which is a vice versa in opposite of your support. Resistance is a price. Uh, okay, resistance price is a strong price that the market is consistently failing to break above or go above it. As you can see, you had this resistance formed here, pushing the market down, came back, tested on the very same price, went down again. It usually pushes the market down if it is not broken. So if it is not broken, if price fails to go above this and close above this, then the high chances are it's gonna drop. Okay. We will not buy as resistance until it's broken. So if it is not broken with a true breakout candle or with true breakout candles, we can't really say price is going up. Okay. So if it is not broken, we are not gonna buy. Okay, it's not high probability to buy close to a resistance. Okay, for this reason, we'll not buy. We'll look for sell trades once the resistance is confirmed. So if it doesn't break above, we can look for short positions going down. As you can see, price is dropping from that resistance level. And then we have what you call a flip zone. Most often, a broken support or a broken resistance will become a new support when price is trading above the broken resistance. So if you have this as a resistance, there's a resistance here. The market breaks above and it's trading where? Above the resistance. So if it pulls back to the broken resistance, there's a possibility that it's going to go up. If you have a scenario like this, it's called a flip zone. Okay. Most often a broken resistance will become a new support when price is trading above broken resistance, and vice versa with the broken support. Price that has acted as both supports and resistance is called a flip zone. So that's a flip zone. As you can see, price that particular price has acted as both supports and resistance. So that's your flip zone. Okay. So when we talk about supports and resistance levels in the forex market, we are referring to ex- extreme price levels or zones or areas, whatever you want to call them. Okay. Let me just open the platform. Um, okay. Um, I like to think of supports and resistance as a zone rather than a specific price. Okay. I consider them more of being zones than being like a specific price. Let's say, for instance, if I say, okay, let's say I have that particular price, 1,23, 1,233, this one. If I say this is a resistance, I mean a support. If I say this is a support and say this is a resistance, if I take this one as a resistance, take this one as support, you can see price tried to pull back and retest on that particular price, but it didn't reach. So it didn't retest. Same as this one, it didn't retest on that particular price. Same as this. This was also a possible retest of the zone or of the support price. It didn't reach the support. Same as this one. If you have this as a resistance, you can see price tried to pull back, but it didn't reach that that resistance. So that's why I say I see of support and resistance as a zones, level, areas. Okay, it's like a range, like a trading range. Probably saying around this price and that price. You know that this is a resistance area or resistance zone, or resistance level, whatever you want to call it. It's just around this price. Okay, you'd see that most often the market is not gonna retest a specific price. Like if you have a line like this and say it's gonna go back and retest that specific price, it's normally it wouldn't go to that specific price. It would go around this range. I mean around a zone like this. So it can reject anywhere around the specific range. Okay, so it can be there, it can be anywhere. Okay, it can, as you can see, this one rejected. Where did this one reject? It's rejected. Uh, this is where it's rejected. Okay, this one. So it can reject anywhere. Okay, but if you had just that price, it was not going to get the reaction. Okay, same as this, same as this. Didn't retest, but if you mark like range like this, so there's around this price, there's support that has formed. You can see you get your nice reactions from that range. Okay, so yes, that's let me just look for more examples. Let's say the market is going down like this. If you're gonna mark this as a resistance, that's what a possible retest. That's what a possible retest didn't reach a resistance. But if you mark it as an area like this, make it a level, you can see you get your retest. That's another retest. Same as this one. If you're gonna draw a line like this and make a support price, these didn't retest on that. But if you maybe draw like this. I'm sure there is a retest if you draw like this. See, if you make this a range, there is that retest. Okay. Same as this one. You could have taken this one as a resistance, but did it reach your resistance? It didn't reach your resistance. Now, if you're gonna draw it like this, you get that nice reaction from the resistance. Okay, I think this is another one. Another possible resistance. You can see that price tried to retest but didn't reach. Same as this one, it didn't reach the anticipated resistance. But if you draw like this, okay, it's more like your supply and demand zones, supply and demand areas. But this is just supposed resistance um, areas. But some do use supply and demand like this. But yeah, it's just different views. This is another support. I mean another resistance. Doesn't reach. Okay, it didn't pull back for a retest. But if you maybe like mark like this, I'm sure there's another one. Say you have this, you can see it didn't go back for a retest. But if you mark like this, you can see your rejections. You can see where price is reacting. It's reacting exactly that. There's another one. Didn't retest. Mark it like this, and you get a reaction. Okay, so it's just something like this. Okay, something like this. If you mark this one, put a resistance here. You can see price did not reach that price, but if you put it like this, you get your reaction. Okay, so this one, okay, this one wasn't retested. Hasn't been retested as yet. I'm sure this one is also reacting to something. This one, if you draw a line like this, yes, it's reacting to this. Again, if we had this like that, I'm sure we're not gonna get this reaction. If we used that highest price, you can see we didn't reach the black line. As some might take like the highest price of where price turned. There's your reaction. Okay, so just use a zone instead of a specific price. Okay, for simplicity reasons, I'll just focus on support. The same will apply vice versa for resistance. Okay, well, let me say I'll focus on resistance. Yes, I'll focus on resistance. But the same will apply for support. I think I'm just gonna use this Euro USD. In a downtrend, resistance levels will form where you have less interested buyers. That is where short-term buyers are closing their trades. Okay, in a downtrend, let's say the market is going down. I'm just gonna focus on this downtrend. This one, when the market is going down, you can see the market is creating what? Lower highs and lower lows. So this was a downtrend here. So I'm gonna focus on this downtrend. After the trend line break, okay, you can draw the trend line on monthly. maybe after that monthly break, when the new trend was unfolding. So after that break, okay, let me just, yeah, but that's a monthly trend line. It's not a daily trend line, but we're just gonna focus after this break. I'm just using it for, yeah, that's where we're gonna focus. So after that, on this downtrend, so I was saying in a downtrend, support, I mean resistance levels or resistance zones will form where you have less interested buyers. Okay, where short-term buyers are closing their trades or closing their orders because you are in a downtrend. Okay, in a downtrend, you have more sellers than buyers, but you will have. There is a video where I talk about a trend. It's on this channel, how to identify a trend. This is a trend. This is the market is going down. You can see it's creating a highs, lows. From that initial high, you have these lows, that high, low, high, low, high, low. But you can see that the market is in a downtrend because it's failing to reach the previous highs. That high couldn't reach that high. This one couldn't reach that high. This one couldn't reach that one. That one couldn't reach that one. This one couldn't reach that one. This one reached that one but couldn't reach that one. Okay, so in a downtrend, um, you will have strong sellers, more sellers, okay, then you have fewer buyers, uh, sellers than buyers. When the market is going up, that means you have some buyers coming in the market. Okay, there's these retracements. These are buyers coming in the market, and then they close their trades when the market is going down. Okay, you have sellers coming in, so buyers are going to be going out of the market. Now, I'm saying your resistance zones will form where buyers are closing their trades. So these are buyers going in the market, and then they closed their trades here because what? They think price is expensive around that price. Okay, so now buyers are closing their trades. You have less interested buyers around that price. Now I said resistance and support. It's not like a specific price and saying at this price there's um, support and resistance. Okay, I'm gonna make an example of with my currency. ZAR, USD ZAR, compared to the rand, we are normally sitting at about 14 rands, 14 rands, compared to the dollar, around 13, 14, 15. So if we're above 14, then we know that we are not doing good. Let me just show you something and then I'll continue with this. Now, I'm saying around 14, 15, 16. That's where we are normally, where USDs are. Okay, we've been here the past for the past um okay, for the past since 2016, for the past 4 years we've been around that price. So I know that when the market is just around this price, there's a resistance here. Okay, there's a resistance that is here. But now I can't take this as a specific price because it is not always at 15, 16, 1569 where we get this rejection. It is around that price. Okay, it is around this price where it is extreme or expensive. So when I mark a resistance, I will use it as a zone like this so that I will get these rejections. That's a rejection, that's a rejection, that's a rejection. So it's a zone rather than a specific price. So again, going back to this, if we have buyers closing their trades here, they are closing their trades around that area. Okay, that's where you expect sellers to come in the market. So as I said, in a downtrend, your resistance will form where buyers are closing their orders. So they close their orders, then there's a resistance that has formed. So when it pulls back, buyers, if it goes up, buyers are going in the market. Where are they going to close their trades? Where they were, where they previously closed their trades, which is here, okay, around that price, around this price range here, okay, around that price range. If they close their trades, what's going to happen? Sellers are going to come in the market. That is resistance. Price has found resistance around that. That's why it's called resistance. It has found resistance around this price range of 1,17 to 1,19. Around that price range, there is resistance. Okay, that's why it's dropping. You will have buyers coming in the market. Again, they close their trades where? Right about that price. And then what do you do? What do you get? Sellers coming in the market. Okay, same as this, you have buyers coming in the market here and they close their trades. But this is a reaction to that. They came in again in the market, closed their trades around that price, and did what? Sellers came in. You know that around this price, buyers are going to close their trades. Okay, they're going to close their trades around that price. So you get what? You get another resistance around that price. So if there are buyers that are going to come in the market, most probably they're going to close their trades around about that price. Okay, and then you'll have sellers coming in again. If you get buyers coming in the market, but now not to say every pullback is a resistance. Okay, that's another one. Buyers came in, sellers came okay, went out, sellers came in, and then you have buyers again where they're going to reject same price where they closed their trades previously. That around that price range. Okay, that's another pullback. This is another pullback. The buyers closed their trades and sellers came in. When more buyers came in, what did they close their trades? Same price range. So now that's how you would get those. All right. Um, so as I said, it is when where buyers are closing their trades. That's where your resistance is going to form. It is also the same price or same price area where short-term or long-term sellers are placing their orders. Okay. When they close their trades, sellers are going to come in. Sellers in the market are going to place their orders. They know buyers are going out. Sellers are going to place their orders in the market. Okay, because price is expensive there. Okay, no one is interested, but you have less interested people who want to buy that price, or less interested sellers. I mean, interested buyers. Sellers are coming in. Sellers are coming in again. All right. Same as this. We've already did this. Okay. So they will form like that. We are just so those will be your supports and resistance zones. You can also use your line charts to find these zones. Okay, you can also use your line charts and just see where price is rejecting. Let's say I want to find um, in a downtrend. It's easier to see if you're using a line chart because you can just put your lines where you have these strong moves. Also use your candlesticks to get now that range. It will be easy for you to see because whenever there is a strong resistance, you're gonna see with the candles after a resistance has formed. Because if we are going up, you can see the candles that are where buyers are coming in. It will have these strong candles. Okay, in an uptrend, you will have these strong candles. This is a sign that they are coming in the markets. These strong candles after a resistance. I mean, just before your, if this is our support, just after our support, you will get these candles. Okay, but again, mark it as a zone so that you can get these reactions. Okay, same as this one. Look at how strong the bearish candles were when the sellers were coming in a downtrend. Okay, so in a downtrend, look at the bearish candles, how strong they are. Okay, you can see that there are some sellers that are strong sellers, that are aggressive sellers that are coming in. Same as this, you can see that those aggressive candles, they are aggressive sellers coming in the market. So if you had buyers, they're gonna go out. If you had these short-term buyers, they're gonna go out, and then aggressive sellers are coming in. You know that a resistance has formed here, and then price put back, tested, and dropped. Okay, so that is the first video of the series. Um, we're just looking at the support, resistance, how they form or where they form. Okay, so if a support area is not respected, let's say you have a support, you had marked the support. Maybe a different pair. Let's say you had marked, where can I find? Okay. Okay, this is Euro JPY. Let's say you had seen this in an uptrend, mark this as a support. Okay, so if a support area is not respected, it doesn't necessarily mean that you are wrong. It can also mean that the buyers were, the sellers were still interested. Okay, still interested in selling, or you didn't have enough buyers to buy at that price. Okay, so you mustn't be emotional about it. Let's say you have something like this. Okay, there's a support. This is also another support, but price just went through the support like it wasn't there. Okay, so if it does like this, it just means that you didn't have enough buyers here. You didn't have enough buyers who were interested in buying, so you mustn't be emotional about such. Or they were still going for a much lower price or a much cheaper price. Buyers were here. You can see the moves away from that resistance. That support. Look at the reaction. Again, if you had marked this as a support here, you are not going to get the reaction. Okay. But if you have it like this, get your reaction. Okay. So yeah, thank you for watching the video. Make sure you subscribe to the channel for more of our content. That will be all. Thank you.